Hey everybody, this is John. Welcome to the free video. So what do we got cooking today? So far in 2016, I have done exactly 0 trades, and I'll talk about that more in a second. It feels really good to be flat, but it's about time to get back in the action again. And one of the things I've been looking at are in this environment where you've got this crazy volatility and having the ability to kind of sit back and watch it. And keeping in mind that Friday we're going to have employment data, so I'd actually expect that we may be a little choppy for the next couple days. But it's just looking for interesting opportunities that are out there. Alibaba came down, slammed into 3 ATR, had a really awesome close today. When you see something like this, suddenly you start looking at potential gap fills. So I like the idea of selling some put credit spreads on this with the idea that it's going to kind of push up here to try to fill some gap fills. Actually, as I'm saying this in Iron Condor, where set this up on Wednesday morning and take it off on Thursday afternoon before the close, you've got a great recipe for a stock that's proving that at least in the next day or two, the idea that it's going to roll over and die is a lower probability, okay, especially since we're getting into the employment numbers. The market's looking to chop around a little bit, but also not looking for this thing to take off. So I like the idea of a conservative trade, selling some premium on the weekly options, and then getting out of it before Friday. And I think Friday is going to be very volatile. And then the other stock I've been watching, and this is a more thinly traded stock, but it's also interesting to see a stock in this environment that it's not really paying attention to the market. Yes, it's come down, but in light of other restaurants, you can see, essentially it's still trading sideways. We are building up a daily squeeze, okay? And on something like this, when I look at this and just go, I don't know if this is gonna go higher or lower, but I do know that it's about to release some volatility. This is one of the few times where I'm okay actually buying a straddle, okay? Very, very rare to buy a straddle, but on something like this where you go out 2 weeks, 3 weeks, and you're just essentially looking for it to make a greater than expected move, okay? I like this trade because it's in this kind of market. You really, at least I don't really want to make a lot of directional bets here. It's more bets on, is this going to stay within the expected move, i.e. Iron Condor on Alibaba, or does this have the potential to exceed the expected move, and keeping it very, very simple from there, okay? All right, so what kind of trades am I going to be doing? Okay, so for those of you that have not heard this is my plan for this year in terms of the accounts that I'm trading for the trading room, and kind of a loose plan on each one. And I'll go through these in more detail, but I just want to give you guys, we talked about this in the room, but this gives you a chance to look at it. So I'm going to set up 4 accounts, okay, 1, 2, 3, 4. And this is the one I'm waiting on right now. In fact, I need to send an email to see why the money is not showing up there yet. But I set up an IRA and I'm putting $5,000 in, and my focus on this account is just going to be directional options. Obviously not a ton of trades, it's under 25K, right? My risk, so what this means is what my the risk amount that I'll be taking. And so I look at this as moderate risk, meaning I'm not going to bet the farm on one trade, but I'm also going to, my goal is that by the end of the year this account's $15,000. Okay, now the reason you set a goal is to understand how much you're willing to risk. I'm not willing to risk $5,000, but am I willing to risk $2,000 of that account, okay, or $2,500 of that account to get to 15K? And ideally what happens is you start off small, build up some cushion, and then you increase your bet size and try to get to this level. Now, it doesn't mean it's going to work, right? I'm just telling you that's what I'm going to try to do. Then I've also set up a $15,000 account, and this is going to be futures, mostly shorter term trades, but some longer term trades. It's just going to be futures, and I'm going to call this aggressive. My goal with this account is to get it to $50,000, and if I can then get it to $50,000, anything over $50,000 I would wire out for income. So i.e., here it is at 15K, and let's say I get to 50K. And then, maybe the next week I make $1,000. Great, I'm going to wire that out. And maybe the next week I make $2,000. I'm going to wire that out, right? And again, I don't know, obviously, for sure if that's going to happen. That's what my goal is, okay? Then for my third account, it's going to be a $45,000 account, and this one is just going to be directional options, okay? No premium selling or anything like that, pure directional options. This is going to be aggressive. My goal is to get it to $100,000, okay? And then same thing, if I can get it to $100,000, anything over that, I would then wire out any overage for income, okay? And then finally, the $185,000 account, this is going to be a portfolio margin account. I'm going to do mostly premium selling on this, and it's going to be conservative to moderate risk. And my goal is simply to get this $185,000 account up to $200,000. Okay, so not a huge stretch. And then anything over $200,000, at the end of a week, wire it out. Okay. So that's my plan, and then what I'll be doing in the trading room is just sending out texts both in and out of the trades, and I just got to figure out how to do it. Like, okay, is it going to be account number 2 by 6 or whatever, or is it going to be I got to figure out the names of it. But that's the overall goal, okay? And if you're a gold member, you will be able to get the texts and the emails for these trades. Of course, if you're in the trading room, I'll be doing them in the trading room. But for those of you that don't know, if you're a gold member, you can sign up and get texts and emails of the trades that we're doing in the room. If for some reason you're not getting those, that means you're probably newer and you have not signed up. So you can just contact us and we can walk you through that. You can actually do that on your member form. Okay, so that's that. And so for the first time in, 2 years, I think, I'm going to do a free webinar on futures trading. Now, this is geared towards people who are brand new to futures, but if you're intermediate to advanced, that's okay. You'll get a few nice little kind of tips and tricks on this webinar. And what I'm going to be talking about is essentially why 2016 is the year you should learn futures, okay, if you don't. So here's what I'm going to talk about. Why I love trading futures. You guys have seen me do it, hedging, directional, different things like that too. Of course, you've seen Tony, you've seen Neil do it as well. My favorite intraday indicator for futures. Why they aren't as scary as you think. Which contracts to never trade. And by never, I mean never. And last but not least, this is an experiment I did. How I took a $15,000 futures account and turned it into $70,000 in 5 weeks. Okay, now, obviously that is not something that is going to happen to everyone, and the risks involved in futures are high, but it happened. I can show you the statements, and I can show you at least what I did to give you the idea of the potential of futures. Okay, simpleroptions.com/futures 2016. Just do your first name and your email address there. And this free webinar will be on Thursday, January 7th at 7 o'clock Central. All right, looking forward to seeing you there.